Hi, this is Julio Gonzalez with your CPA Leadership Weekly Podcast, and we have a special guest today, right, Eric?
Yes,
How's
sir.
everything out there in Texas?
Oh, everything's great. Businesses are opening. We can go to the gym. We can eat. So, just trying to help my clients stay afloat right now, and hopefully, we can continue to do it safely and kind of lead the way for the rest of the country.
Good for you. The small businesses need you more now than ever, really. I mean, you're the trusted resource with the ideas to get through this COVID and everything else in these trying times, huh?
Yeah, I don't know if I say that I have the ideas, but we just want to be a great resource and to be a tower of safety and refuge and hope, for our clients, with our knowledge to provide them the leverage they need through such difficult times.
Yeah. Well, Eric, let's start with your background. Tell us a little bit about you and your firm.
Okay, so my firm is Pierre Accounting. I founded it in 2014. It was a side business. And then I continued to hit the glass ceiling in my corporate career. So I decided to go on my own. And in 2016, I moved to California, opened offices in San Diego, Los Angeles. And then in 2018, we reestablished our presence in Texas. Our corporate headquarters are here in Austin, Texas. And we still operate in San Diego, Los Angeles right now. And, what makes us different is that we're one of the most diverse accounting firms in the country. No one ethnic group makes up more than 40% of our workforce. And we also are able to solve the problem of our time through our traditional accounting services and other strategies that we have.
So what are those other strategies?
Well, some of it involves, right now is a great time to do cost segregation if you own commercial real estate because, Uncle Sam has allowed you now to go back and pay taxes through net operating losses when carrybacks were suspended. So, that's one way. Plus, you can also take a look at some of the credits available for retaining employees for such a time as this.
Yeah, what else are you working on, Eric? I mean, it sounds like, what happens? The clients come in. Are you being proactive? Are, the clients reaching out? Are you reaching out? Because I got to imagine, more than ever, they really have to rely on their CPAs to get them through this and come up with ideas to survive this.
Excuse me, my AC is broken. Yeah, we're very proactive. Yeah, AC is really valuable out here in Texas. When it doesn't work, it's unbearable. Yeah, we're a very proactive firm. We stay in touch with our clients. I like to run my practice as if it's a family. And so all our clients are, our valued family members. So we stay in touch, whether it's through social media, periodic phone calls. We've had to check in on our clients on the West Coast to make sure they're okay with the recent, rioting. We've done a webinar. We're distributing that out right now. So we're just trying to do our very best that we can do and use the technology available since we can't do the traditional face-to-face with COVID-19 right now.
Yeah, so you've had a pivot, basically.
Yeah, and our pivot wasn't as difficult because what most people did not know is, you'd see me in my office by myself, but my staff and my team had always worked remotely. So that pivot, we were prepared for this. We just didn't know that this was actually going to happen. But because I don't like to supervise people all day, I empower my staff to do their work and build relationships. We were already ready for this.
Good point. So you're not only a CPA, you're an entrepreneur.
Yes, I'm an entrepreneur, and I'm working on getting my wealth management license right now. We work with Smith Wealth Partners, and so because there's some tax strategies where involves assets under management, so that also allows to leverage relations with other financial professionals. And then I already have a life-only insurance license with the state of California, and I need to update my paper with the state of Texas.
I think you bring up a good point. I think that, a lot of the expertise in tax can get you so far in terms of your tax liability and wealth preservation. So we can use the tax law to the fullest extent and
right.
Partners, but also sometimes you need to bring it down even further through smart investing.
Absolutely, because there's different types of investment vehicles out there. that can help you save taxes. And a lot of people think that they're just for the ultra wealthy. Now, some of the strategies make a lot more sense for the higher net worth individuals and families because of the cost. But if you're somebody making $200,000-$300,000 a year as a family, there are opportunities through investment vehicles to significantly lower your taxes on a W-2 salary. Obviously, business owners is much easier. You have a lot more room. Businesses, you have up to 475 deductions for taxes. W-2 individuals not so much. But if you start making $200,000-$300,000, even $180,000, there are a lot of opportunities that most people are not aware of. And so we made a commitment to, educate ourselves of that. And then we also have a back office through our relationship with Lombardi Family Office and firms like yours to be able to separate ourselves so that, basically when people deal with us, they feel like, they can look at us like, wow, they're as deep as the 1927 Yankees or the 1996 Chicago Bulls.
Eric, 475 deductions. How'd you come up with that?
Oh, it's written down. I couldn't name them all right now. If you held a gun in my head, I might be able to name 75.
Well, listen, you send us
on a good day.
You send us those, and we'll send that out with the podcast for everyone to contact you.
I just think that if you do that, then most people may fall asleep after number 20.
I don't know. Saving money, that keeps our attention, right?
Oh, absolutely. I love saving money. I love beating the IRS. Absolutely.
You fought the IRS and you won.
Yeah, I'm actually 6-0 like Michael Jordan in IRS audits. That's fun.
Wow. Wow. So you're the king of the IRS audits.
I don't want to say that because I'm sure there's somebody that's got a better record than me, but I definitely like my chances. We do things the right way, and our clients have an understanding. And basically, we just tell our clients, whatever you do, please listen to us.
Yeah, good point. So, tell me, you brought up family offices and you partner up there. That was a term, I think, that 10 years ago you wouldn't hear about, and certainly you hear about it more today. We have our own family office. Tell us about what you're doing in the family office space.
So basically, when it comes to the family office space, we basically can do anything financial. So, we've got partnerships with, wealth management firms, engineering firms like yours and another one, insurance. Basically, what we do is by having the modern family office is that a well-accomplished family can come in or a middle market business and get everything taken care of without having to go to 5 different offices, because traditionally you only talk tax to CPA and then you go to your wealth management about that. But the problem is that I changed it because I realized one day that there were some clients of mine that were wealthy, but I didn't know that because I was only dealing with their current income and not looking at the big picture. And so that allows me to look at a bigger picture on their whole financial situation to where we can leverage that relationship, and also that we're able to save our clients time, the one thing that you cannot get back. Because if you've been in business, you can make money and lose money, you can gain weight and lose weight. The one thing you can't get back is time. And so we make it easier we have a team that can deal with the wealth managers, the engineers, all that, so that they can focus on building their business and spending time with their family.
Eric, speaking about, and I love what you just said, but speaking about gaining weight or losing weight, I hadn't put on a suit in 2 months since this pandemic. I wasn't sure which way it was going to go this morning in the closet. Was it going to fit? Was it going to not fit? Was I going to have to go in my wife's closet and get her Spanx? I wasn't sure. And by the way, listen, my wife doesn't have a Spanx in case she's listening.
Okay.
But I didn't know.
I don't have a Spanx. They're not long enough. I'm 6'8", but
You're 6'8"?
Yeah, my dad's taller than me. I'm not even the tallest CPA in my own family. So
I thought you're the tallest CPA in the country at 6'8".
No, there's a guy I know in LA who's 6'10". So he took that title away from me.
Unbelievable. I had no idea.
Yeah.
Not every day you run into someone 6'8".
No. I mean, for me, I don't play basketball much anymore, so I don't really see guys my height that often. But, when I do, whenever I see someone taller than me, I always take a picture of them to remind people. And it's a good reminder for me. You'll always meet somebody in life that's bigger and badder than you.
Love that. And I think that's true. And I think it's something to always be thinking of and be thankful for, sure. So,
Absolutely.
but let's go back to the family office real quick. So I agree with you, Eric, that the CPA should be intimately involved, not only in the tax perspective, but in the investment perspective, because sometimes the two can either work together or work against each other. And I'll give you an example, Eric. I mean, we had seen some tax returns for athletes where the tax team on one side was doing things, but on the investment side, they were doing these investments that had no tax implications, and the athlete had no deductions, and so they weren't preserving their wealth.
Absolutely. I absolutely agree with you, because at the end of the day, it's about wealth preservation, whether you're an athlete or you're an established, business owner, or if you're part of a family dynasty where wealth is passed along. Because, where you live in South Florida, where my family, my parents live near you, there's a lot of second and third generational wealth. And even though that they can't necessarily spend that money all at once, you still want to be able to protect it and pass it down. And that's why it's important to be in the same team. But, again, I had to learn this because traditionally CPAs, we're very closed off and protective because we're afraid of working with someone like you, working with a wealth manager, because if something goes wrong, we're afraid of losing the client. And
No doubt about it.
You can't live in fear.
No doubt. So what do you do, Eric? You kind of start with an audit initially when a client comes in and kind of see the full picture, and then bring in the investment side of it, bring in the tax side, maybe the insurance side. I'm not sure.
Yeah. So I guess, audit's a good word, but yeah, basically I'm like a doctor. You go to the doctor, I just listen to the client say, tell me what's wrong. And then we start working a solution. And, one of the biggest challenges that, a lot of people are afraid of change. And so sometimes, we have to be able to, what's great about our business is that I can actually quantify my solutions. Other practices, you cannot, but mine, I can quantify. Once I can show them that I can create such a large arbitrage and leverage, it usually gets them over.
It makes sense. I read this morning that the tax code has 70,000 pages. So, and I kind of equate it to a doctor, right? The doctor is going to be your general doctor. He's going to listen to what you're telling him or her is wrong. But then you have to make a diagnosis and then bring in the experts, bring in the investment of experts, insurance experts, right? You have to kind of quarterback all that.
Absolutely. Because in fact, some of my wealthier clients, I had a chat with one guy. He's a realtor. He's doing very well out in San Diego. And I had to remind him, did you ever set up an estate? You're buying $1 million house and you live in San Diego, California, where if something ever happened to you, your home's going to be tied up in probate for years. And so he because so many people, they're just busy, and we tend to think that we're invincible, but at a moment's time, your life is over. And at a minimum, every American should have at least term insurance at a minimum, so that you're worth more dead than alive.
No doubt about it. I mean, Eric, I'm a lot older than you, and I'm at that age, right? I'm at that age where, I had friends that passed away this year from unexpected heart attacks and strokes, and, in some cases, they didn't have that in place. And then, put their family in place. So, you're kind of bringing that all together, right? And making sure that not only are they tax efficient and wealth investment efficient, but optimized on the insurance to make sure that there's, that generational coverage.
Absolutely. I was also fortunate, I grew up in a home where my dad was a CPA. He wasn't a practitioner, but I got to grow up talking about money. And so I was always around it, and I was fortunate along the way. He even showed me his net worth, and it was kind of creepy, a few years ago. He took me upstairs to the loft at the house we had in Houston and just showed me these passwords. Like, why? I was like, hey, why are you doing this? And then he almost died of an embolism. He survived. But had he not, at least we would have been taken care of. And, my mother, my sister, and I would be, more than taken care of. And that's the first thing, particularly if you have a family, but also for single people. Because if you go to GoFundMe, I'm sure you've done this, and anybody that's watching it, you should go look up how many people are asking for $10,000, $15,000 for a funeral when you could spend $20, $30 a month on a term life insurance policy that could get you $200,000, $300,000. So
Yeah.
again, you don't even have to be super wealthy to accumulate insurance and other protections that could end up letting you pass on a few $1,000,000. But it's just a lack of education. That's what I have to do, and others like yourself do, and it's that we have to continue to be committed. And I think overall, my industry, we're not necessarily the best communicators, but there are other CPAs that do a great job of that. And we just have to continue to educate. Because
Eric,
you only know what you know.
Yeah. How's your world changed since this pandemic?
Whew. Well, normally in late April, early May, I'm actually where you're at, South Florida, with my family for a couple of weeks. So I'm not used to being in one place this long. But we had a lot of phone calls with the people asking about the stimulus check, PPP, EIDL. We had people freaking out, not sure if they're going to stay in business. So it seemed like at times that I played a role of counselor.
And were you helping them with the PPP?
Yeah, we've helped some with the PPP.
Mm-hmm.
Some of my clients learned the hard way about not having a payroll, because the payroll records is what makes a big deal on getting a PPP. Other people that were not our clients that contacted us learned the hard way about not keeping good tax accounting records. In fact, one of my clients who's an underwriter at Chase said that 30% of applications were rejected by Chase because of bad tax accounting records.
No doubt about it. I mean, you got to pay into the system, and you got to have the records to be able to get back from the system, right?
Absolutely. And so yeah. I hope that's a lesson that, we learn going forward, is that, good accounting is not cheap, but it's not necessarily valued by everybody. And I know from my higher echelon clients, they value it, and this, the cost, the savings they get. So even if you pay me, $10,000, we're usually bringing in $50,000, $100,000 of savings. So
that's good. I mean, listen, I always think of it as, do you view CFO, CPA accounting work as an expense or an investment? Because like you, I tell my clients that, having good resources is not an expense, it's an investment, because you'll get a 5 to 10x return on it.
Yeah, I mean, it's an investment. For instance, I'm a sneakerhead. I love wearing Jordans. That's an expense. I mean, I guess maybe it's an investment on some of them, but that's an expense. But whatever I spend on investing in my business or certain strategies for myself, I get a return on investment. You just have to be patient, and it's also just a mindset that we have, because our country, we have more of a consumer mindset. Our economy is based on consumerism, which is very unique.
Yeah. So listen, you were on national TV recently. I saw that. You did a great job. And what were you talking about there?
Can you repeat that again? The thing froze for a second.
Oh, yeah. I was just saying that you were on national TV recently, and I thought you did a great job. And I just was curious what you were talking about on national TV.
Oh, well, thank you for your kind words. On national TV, just talking about different ways of generating cash flow. So we talked about, employers can get credits for paying sick leave. Mm-hmm. You can defer your payroll taxes for basically 2 years. So the government's giving you a layaway plan. You have an opportunity for the retention credit if your revenues will drop 50% or lower in comparable periods. I also spoke about the 5-year carryback net operating losses. And then we spoke about commercial real estate, particularly with the qualified approved property, shortened to 15 years, but with bonus depreciation, you can now claim all that in 1 year. And we also spoke about cost segregation as an example, because it's one of the best ways to identify, qualified approved property. And so I actually did a webinar, and the TV appearance actually helped me prepare for that webinar. And so It was great speaking with Sam, and I had heard that she was very sharp, and she is, and I learned that she actually was a biomedical engineer before student at Duke before she went to entertainment. So she was ready.
Yeah, job well done there.
Thank
So,
you.
look, what do you do outside of accounting? I know you sing a little bit, right? You want to sing for everyone?
Oh my gosh,
Maybe
my
you can
mom's a
sing.
great.
Maybe you can sing how they can get a hold of you.
I won't disgrace my family because my mother used to sing professionally. When I'm not working, which is rare right now, I like to travel. I like to go to live music. I got to see Mike Phillips, who actually has a shoe contract with Michael Jordan right before everything shut down.
Mhm.
And I like to read live sports. And then I also like to play basketball recreationally. But right now, my doctor said I can't do that.
So, how many Jordans do you have?
Oh, I'm 35.
35.
Yeah.
Well, what's your best pair?
Oh, wow. That's like asking a parent to pick their favorite child.
Okay.
I like the Jordan 11, and I would say the Concorde.
Do you have a picture of your collection?
Not on me right now, but I could send you one.
Yeah, send that. We'll post it.
Okay.
All right. Well, listen, Eric, it's been great. How do people get a hold of you?
Okay, so there's a few ways you can get a hold of me. If you want to do traditional telephone, you can call our office at 512-900-8293. You can also email me, eric@pierreaccounting.com. You can also find me on the web at www.pierreaccounting.com. And there's a place where you can fill out a contact form. If you're on social media, you can find us on Instagram at Pierre Accounting. You can find us on Twitter under Pierre Accounting. And then we also have a YouTube channel, Pierre Accounting. So I'm pretty visible. So I would love to hear from y'all if you want to know how you can help change or improve your financial legacy. And we want to explore the possibilities with you.
Eric, it's been great having you on. At 6'8", you're almost the tallest CPA in the country, if not the world, right?
No, there's a guy named Mark. I know he's 6'10" in LA. He actually played volleyball at UCLA, ironically. So he's an ex-athlete himself.
So currently you're in the top 2.
Yes, yeah, I'll take that.
All right, great having you on, Eric. We'll have you back, at the end of this year to see how things are working out there, how you survived all this, and what you're doing to pivot with your clients.
Thank you. Yeah, I appreciate that, and I look forward to staying in touch. And when I come in town, I'll make sure we'll go to the Clevelander.
All right, I look forward to that.
All right.
I'm gonna expect that.
Trust me. Oh, they expect me there too.
All right, good. Look forward to it, Eric.
All right, thank you, sir.
Take care.